The US stock market snapped a three-day losing streak. Investors dispelled fears about a full-blown military between Russia and Ukraine. So, US major stock indexes closed yesterday with notable gains. The Nasdaq closed with the strongest growth of 2.5% and the Dow Jones rose 1.2%. The S&P 500 closed 1.6% up at nearly 4,471 points. Today the index is trading at about 4,466. Analysts foresee its further growth within the corridor of 4,440 and 4,000.5 points. Due to easing jitters between Ukraine and Russia, the market downplayed negative data on the US factory inflation released yesterday. The PPI surged twice higher than in the consensus. Producer prices jumped 9.7% in January from a year ago, the fastest increase since May 2021. Previously, investors found out that consumer inflation accelerated to the highest levels in the last 40 years. So it's evident that the Federal Reserve is facing a challenge of bringing inflation under control. Today, market participants await the minutes of the Fed's latest policy meeting. Perhaps the market will find out some clues of looming monetary tightening. The Fed Reserve is widely expected to raise the official funds rate by 0.5%. James Bullard, a voting member of the rate-setting committee, called on his colleagues to increase the key interest rate to 1% by July. The US dollar's position will depend on signs that US regulator is sending before the meeting scheduled for March, as well as developments on the standoff between Russia and Ukraine. Yesterday, the greenback lost ground in light of the data on soaring factory inflation. Today, the US dollar index is trading slightly higher at 95.94, poised to climb again. The expected corridor for the index is seen between 95.60 and 96.20. A halt in the greenback's growth pushed down the USDCAD pair. Besides, oil prices are also trading lower as geopolitical jitters in East Europe are ebbing away, thus reducing risks of disruption of gas supplies from Russia. Meanwhile, the currency pair is consolidating in the range between 1.26 and 1.28. It's now trading at nearly 1.2664. The protests of Canadian truckers against COVID mandates are moving into high gear. The Freedom Convoy began on January 23. Protesters drove from Vancouver on the western coast to the capital city, Ottawa. Along the 4,400-kilometer way, more and more participants joined the Freedom Convoy. As we told you earlier, the Ambassador Bridge, the busiest land border crossing between the US and Canada, reopened late Sunday. Nevertheless, massive clashes are still underway downtown Ottawa. The Canadian Prime Minister declared a national emergency in response to the ongoing civil unrest. The authorities aim to prevent fundraising for the protesters. Cryptocurrency matters a lot in fundraising to the support of truckers. Previously, the Canadian authorities froze accounts accumulating financial aid. So the campaign organizers shifted focus towards cryptocurrency. They have already called $900,000 in bitcoins from 5,000 benefactors. The auto giant Ford is now considering a possibility of delivering spare parts to production facilities by aircraft. The factory is now closed for the time being. The Freedom Convoy is welcomed by Tesla CEO Elon Musk and ex-President Donald Trump. Bitcoin is trading in the red within the corridor between $43,900 and $44,503. Currently, it's trading at nearly $43,846. The digital token seems to enter a consolidation stage. The flagship cryptocurrencies are facing a lot of obstacles, approaching the critical level of 45,000. However, the price could regain bullish momentum following a retracement. Today, market participants got to know an important macroeconomic report on US retail sales. The indicator increased by 3.8% in January, much stronger than the expected 2% growth. Retail sales contracted by 2.5% in December. However, they expanded to the largest extent in a year in January. All in all, consumer spending is steadily on the rise despite soaring inflation and the Omicron resurgence. We hope that your earnings will also grow, dear traders. And that's all for today. See you online tomorrow.